Let me give you a few tax tips when filing for multiple jobs, okay? So here's the overview I want you to pay attention to. I'm going to actually give you a series of questions we have received from our viewers, and I'll give you the real answer so you have a clear idea how to really go about filing taxes for multiple jobs. First of all, people say you must file multiple tax returns if you worked more than one job. This is false. Totally false, okay? And basically, in most aspects of life, it's widely believed that keeping everything in one place will keep you organized, yeah. But all of your recipes should be in one cookbook. All of your child's toys should be in one toy chest, all that kind of stuff. All of your holiday decorations must be in one box. The same rule applies to filing tax returns. So the IRS requires taxpayers to file only one federal tax return, even if they work multiple jobs throughout the tax filing year. However, you may be required to file multiple state returns depending on which states you earn income in. So, because when we talk about filing taxes at the federal level, everything goes by your social security number, okay? You don't have 2 or 3 or 4 or 10 social security number, even if you have 10 jobs, okay? So you only need to file one tax return. So when do you need to file a tax return? Well, if you made income within a tax filing year, you need to file a tax return by April 15th and always declare all of the income you earn from any job. Even if you work multiple jobs in various categories, like let's say W-2 versus 1099, you are still obligated to report it all as one tax return. So what if you didn't work? Do you still need to file a tax return? Not really. Well, the thing is that another common misconception is that if you didn't work, you don't have to file. The notion is not necessarily true. Several groups or categories of people may need to file a tax return even if they don't work. Typically, spouses that do not work need to file a joint return based on their spouse's income. In the case of students, depending on their situation, they might have to file a return to record their income for financial aid purposes or grants and stipends. So if a person is unemployed and receiving unemployment benefits, they will need to file a tax return. Additionally, they must pay taxes on their unemployment benefits regardless if they work during the tax year, okay? And so what is the minimum income to file tax returns? Well, if you're single and under the age of 65, $12,400. If you're single and older than 65, $13,850. And so this is kind of important. Now, if you're self-employed and earn at least $400 in income, the IRS will require that you file a tax return anyway. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let's talk about how do multiple jobs affect filing your tax returns, really. So to reiterate something that I said earlier, you will only ever file one federal tax return. State tax returns are a different story, so I'll get to that later. So it can feel overwhelming when you have to report multiple sources of income. However, it doesn't have to be, because basically you can use the tax software like all the W-2s and 1099s to sort of consolidate your income when filing your federal tax return. Okay, so if you have multiple jobs, you just want to have in one area all the receipts, all the W-2s, all the 1099s, K, J, whatever, and then consolidate them. And if you work two jobs but at separate times within 1 year, the situation is also pretty sort of manageable. Let's say you had one job at the beginning of the year and then switched to another job halfway through the year. In this scenario, the only thing you need to look out for is a significant income jump between jobs. So to compensate for the income spike, determine how much taxes you need to withhold. You can estimate tax withholdings with the IRS resource on their website. And also, if you actually start working, let's say, going back to the hypothetical situation I gave you earlier, let's say you actually you started in January, you worked in one state, let's say in California, and around June or July, you actually switched to another job in the state of Washington. That way you have two different states. You just need to file two state tax returns, but you only have to file one federal income tax return. And if you worked multiple jobs at the same time, the situation is also very easy to manage. If you work more than one job during the year and are not the employer, your extra jobs could move into a higher tax bracket. To prevent yourself from paying higher taxes, try increasing how much taxes you withhold from your check. Again, you can calculate how much taxes to withhold from your check using the IRS resource on the website. Boss, I want to quickly remind you of today's topic. We are having a conversation about tax tips for when filing for multiple jobs. Let's talk about a situation where you're a freelancer, contractor, or self-employed. So when you don't have an employer taking out income on your taxes, it is your responsibility to pay estimated taxes. So estimated taxes are paid quarterly or monthly on Form 1040-ES, and self-employed workers, those who earn money from tips and contractors, must account for estimated taxes. And the thing is that based on our research, there are various types of taxable income that we have seen lately. You have side jobs, for instance, unemployment compensation, and interest from investments, among other things. And also, there are additional tips that I want to share with you when filing tax returns. So when you work multiple jobs, our team recommends filling out separate withholding forms for each job. And so it's also encouraged that you claim allowances correctly to reduce the amount owed after filing your taxes. And so lastly, make sure you are actually filing all of your tax returns form correctly, particularly W-2s and 1099s, which are notorious for having minor mistakes. And the last thing you want is to actually fix, like one day before the deadline, a minor mistake on your W-2. And so when do you need to file multiple state tax returns? Let's talk about that. Now, when you file a state tax return, you may be required to file multiple tax returns, unlike a federal tax return. And the determining factor is income and which state you earn that income in. Okay. And also, if you live in a state, then you might need to actually file income tax in that state too. Let me give you an example. Let's say you actually live in Jersey, you live in New Jersey, and you actually work in New York, or you work in New York or Connecticut. Basically, you're going to have to file three state tax returns: the Connecticut one, the New York one, and the Jersey one, because you live in Jersey anyway. Okay, so this is kind of important. Now, I'm not even talking here about your situation in terms of business. Like, everything I'm telling you is actually predicated on the fact that you are still a sole proprietorship. Because if you were to be an LLC, an LLP, a C corporation, or an S corporation, the situation would have been different. But it will take too long for me to actually elaborate here. So I'm just going to stick to this topic here, this line of reasoning. Let's talk about tracking your sources of income, okay? If you earn income in more than one state or are a business owner working in multiple states, you may need to file several returns for each respective state. The same rule applies if you live in one state but work in another or acquire income from an out-of-state property. Furthermore, if you or your spouse work in a different state other than the one you both live in, you might have to file another state tax return, okay? And it's one of those things where you want to check with your local government or employer to see if your situation warrants filing multiple tax returns. Okay, it's just a lot. It's just quickly. It's really easy to call your state tax revenue authorities and ask that question. And you want to be as specific as possible because this will affect your tax liabilities and your tax obligations. Let's talk about moving to another state and tax returns. So basically, when we talk about moving to another state and tax returns, there are three critical factors of filing in the new states. Okay, so those factors are which states are involved, which state is considered the source of income, and state income tax reciprocity. Okay, so I want to repeat it. Let me just repeat it. The three critical factors of filing in a new state are which states are involved, which state is considered the source of income, and state income tax reciprocity. And let's talk about state by state basis. So states handle taxes and residency differently. Once you have moved and before you file, make sure to check the residency rules for your new home state. Often, a state may consider you a full year resident if you are present in that state for at least 183 days. So if you rent out your home in your old state, you will likely have to file an income tax return in your state of residence. Again, be sure to research the tax return rules for the two states involved with your move. If we're talking about a lot of money, like if you are deriving a lot of revenue you just want to reach out to a CPA or reach out to an enrolled agent or somebody who understands the tax rules in your state, and a CPA, enrolled agent, or a tax attorney to kind of help you out, because it will be worth it for you. Boss, I want to quickly remind you of today's topic. We are having a conversation about tax tips when filing for multiple jobs. Let me talk about source of income here. So after your move, you will most likely file a part-year resident return in both states. Keep in mind that income from interest, dividends, and pensions usually derive from your state of residence. So what I'm trying to say here is that if you actually move from New York to Jersey, you will have to file basically your tax return for New York, but also for Jersey. Okay, the mid-year sort of agreement here, and you also have to think about state income tax reciprocity. So this is actually this phenomenon, if you will, this situation is when a taxpayer lives in one state but works in another, and the states involved agree to exempt the income earned by the non-resident. And state income tax reciprocity only works if an agreement exists between the two states in question, and if your only income is wages. Your employer is obligated to provide you with a withholding exemption request forms for the non-resident state. Don't forget to ask for this, okay? So they're called the withholding exemption request forms. And one thing you want to do here is to actually always protect yourself from late and misfiled taxes. And so the IRS will not be moving the tax filing deadline this year. So be sure to file your taxes as soon as possible to ensure you get a tax refund, okay? And however, if you have misfiled tax years or missed years entirely, you can actually basically reach out to a CPA. Again, reach out to a professional, a CPA, a tax attorney, or an enrolled agent to kind of help you out. It's one of those things where you are able to get protection from IRS collection tactics and file past tax years. I mean, the bottom line is you always need to comply with the law. You always need to comply with the law. You always want to make sure that you abide by the rules that the IRS is following. And it is one of those things where if you know that you owe money, even if you can't pay it, at least you have to file your taxes by the due date, and then figure out if you can reach a payment plan, like a payment plan with the IRS, an installment agreement with the IRS to actually clear the debt. But the bottom line is you always have to file. You always have to notify the authorities of your intention to file, and you want to file within the due date. That way, you are not exposing yourself to additional penalties and fees and what have you. Let me give you a few pro tips here that will really consolidate what I've been talking about for the last 10 minutes. So I'm going to give you a few tax tips when filing for multiple jobs, okay? Tip number 1, you may find that you owe more than you thought. So to be on the safe side, it's always good to put a little extra money aside to prepare. And the taxes withheld from your paycheck may be based on the income for only one job, and don't take into account income from other sources, okay? So always put a little extra cash aside to prepare. Tip number 2, taking on a second job may bump you in a higher tax bracket, so be aware of how your multiple jobs affect you, not only in terms of money that comes in your pocket, but also money that has to go out in terms of tax payments. And out here, I'm not just talking about the federal taxes. I'm also talking about your state taxes. Tip number 3, the W-4 form that you fill out, okay, at a new job determines how much will be withheld from your paycheck for taxes. So this includes a section for people with multiple jobs, so your extra income can be calculated into your tax rate. So fill that part out, and you want to fill it out thoroughly. Tip number 4, if your job situation changes, ask your payroll department for a new W-4 form, or you can get one yourself from the IRS website. It's one of those things where people believe that the W-4 form is like a static, it doesn't change or blah, blah, blah. No. If you're listening to me right now, you can actually adjust your W-4 form as often as you want during the tax year. Not a problem at all. It's one of those things where when you actually contact your payroll department, make sure you can justify the need to adjust the W-4 form because something happens in your family. Maybe you had a you had a birth, a new baby boy or a new baby girl or something like some kind of good news or an adoption. So there has to be a substantial reason for you to change your W-4 form, because it's one of those things. It's not a lot of work for the HR department, but it's just one of those things where they have to abide by the rules, and they have to comply with some rules that the IRS has set and other institutions have set in the past. Let me give you the approach here. So I want to talk to you about tax considerations for gig economy workers with multiple jobs. Number one, you want to keep track. So having a side gig can help you make ends meet or build your rainy day fund. Income from freelancing, running your own small business, or working at a second job. Working at a second job brings in extra income without requiring you to quit your day job, that is, but like your main sources of income. A second job or multiple side gigs have to be reported on Form 1040 at tax time, right? So tracking your income and handling taxes for these multiple jobs can be tricky. So it's one of those things where basically think about reporting to the IRS. So basically it's all about looking at things like Form 1099 NEC, Form 1099K, okay, your PayPal sort of transactions, for instance, your Stripe transactions. So all the 1099 forms are really important for you to actually justify the income you're earning to the IRS. So basically, it's one of those things where you need to understand when we talk about Form 1099 NEC, we're speaking about non-employee compensation, okay? And so when you have that, you will need to complete Schedule C, profit or loss from business. So once complete, you then transfer the net earnings that appear in that schedule to Form 1040, as well as Schedule SC for calculating self-employment tax. And if you have multiple jobs, filing your taxes is not remarkably different unless your jobs and sources of income are very different from each other. If they are, you may need to attach multiple Schedule Cs to your return. And for rents or royalties, this get reported on the newly reformatted 1099 MIS and will typically require you to complete Schedule E, supplemental income or loss. And this supplemental income or loss will then also transfer to Form 1040. Okay, so this is really important to really see the difference here. And so the thing is that when we talk about using allowable deductions to trim your tax bill, it's totally possible. So business expenses reduce your taxable income, lowering your tax bill overall. So as a gig economy worker, you become eligible to deduct certain expenses from your self-employment income, which you cannot do as a W-2 employee. So for example, if you are a rideshare driver, you should track the mileage on your car while ride sharing. You can deduct that portion of your mileage at the per mile rate, which includes maintenance, gas, and insurance costs at tax time. So to understand the expenses, you may be able to deduct as a deduction, to claim rather as a deduction. You'll need to first determine the difference between them, right? So ordinary expenses are those that are common and accepted for your business. Necessary expenses are those that are helpful and adequate for your business. So this is kind of important. And common deductible expenses related to your side gig include business mileage on your car, dues and subscription you pay to business-related organizations, necessary tools and equipment, tuition for work-related education and training costs, home office tax deductions. Let me give you some extra info here. So I want to share with you the top 5 tax surprises with multiple jobs, okay? First of all, have excess Social Security tax withheld. So it's really one of those things where basically you gotta really, you'll get the excess Social Security tax back as a credit when you file your tax return, that's for sure, okay? So if you've entered your W-2s correctly into any tax filing software, the excess Social Security tax will automatically get calculated and shown on Schedule 3, Part 2, Line 10. And so no further action is actually required on your part other than tracking your anticipating excess Social Security tax credits per W-2. The second thing is that you have likely pay additional Medicare tax. And so similar to Social Security, those making over $200,000 to $250,000, single and married filing jointly, respectively, will need to pay an additional 0.9% of Medicare tax. The IRS requires your employer to withhold additional Medicare tax once your W-2 wage hits over $200,000. Okay, so it's one of those things where you cannot really avoid. Scenario number 3, you will likely pay a net investment income tax. So the net investment income tax, or NIT, is really bad news for tax equity compensation. This tax applies to short and long-term capital gains when your gross income, which includes your investment incomes, exceeds the threshold amount with respect to filing status. So this was Congress's way of taxing investments to pay for the Affordable Care Act after a certain level of income. So this is what it is. And next, you also have to really think about the fact that you will likely lose income-based tax deductions or credits. So if you have student loans, or if you have kids, for instance, you have to think about child tax credits and student loans interest deduction. And the fifth surprise here is that you cannot really rely on IRS W-4 calculator to be accurate. Okay, it's one of those things where you can't really. It's better to track things yourself, so you are able to find exactly what really works in your situation. But if need be, you might have to adjust a little bit by sending some cash to the IRS every quarter when it comes to your self-employment tax. That way, you avoid the penalty at the end of the year. Thank you so much for your attention. I really appreciate it. Into this conversation, let's quickly do a recap to this conversation. I was talking to you about tax tips when filing for multiple jobs. So I give you the overview, the pro tips, the approach, and the extra info. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.